Good morning, everyone. Today is Friday, December 4th, and we are here at Harvested Financial looking at the markets. So the big news this morning was the unemployment numbers. Is the market reacting to that? Right now, I'm looking at SPY up about $1.20. It's 32 basis points. IWM is leading the charge of our benchmarks. That is up almost 1%. So we continue to see this amazing value buy. I'll actually point everyone to our Twitter at harvested_DAFE because we have some really interesting stats on what that IWM volume is looking like. There was really big put action yesterday. So on a lot of these gains, we're looking at increased interest. Maybe people are hedging out their gains, or maybe they're making bearish speculative bets. So take a look at that volume detail. Otherwise, the other benchmark that we're looking at is the Qs. And so that's down just a bit today, down a couple basis points. So calm Friday, this has overall been a calm week where we've just seen the market drift up and vol really come down. So on this Friday, what are we looking at? We're going to look at some earnings names last night. One of the big ones, CLDR. So let's take our CLDR. Interesting cloud services company. What they're particularly known for is a lot of their massive corporate deals. And I think that's a lot of what the surprise is coming out, or not, I shouldn't say surprise, but a lot of the interest is seeing them continue to perform and accrue these higher earning accounts. So I think they've seen particular growth in their accounts that are generating over $1 million in revenue. So that's a really nice service sector for them to hit. But we're going to talk about the options here and what some of the vol looks like and how to take advantage of that. So let me share my screen, share my trade hawk, and we will start talking about CLDR. So what are we looking at here? So the first thing I'm gonna kind of point out is the stock moves. That's why we're drawn to it. We're drawn to this 11% move, almost 12% now, up $1.40. So trading around $13. Really interesting options trading in these $13 names that are moving around 10, 15% a day. So up a bunch on news. Typically that generates volume. There are a lot of people making speculative bets on earnings. So when they come into the marketplace before or after, we see some really busy volume days, and that generates really good liquidity for us to take advantage of strategies. So pulling up these December calls, looks like the at the money straddle in this $13 straddle, expiring in 14 days, has come all the way down in, 26 plus 43, all the way down to 69 cents. So, really huge deflation in that straddle. We're certainly not pricing the types of moves that we saw on earnings going forward for the next couple of weeks. So that's really that vol crush that we tend to see after earnings. And I'll actually pull up a historical vol chart here so we can take a look at that, because that's a really important factor to consider after earnings, is what that vol crush looks like. So I'm gonna look at the historical vol here, which has just really been trending down. This is the close to close. We keep going down that way. But what has our implied vol done? So if we look at the 30-day implied vol, that's that white line that just popped up there. So we were seeing a 90 vol out 30 days yesterday. Now let's pull this back up. Our 42-day reading on that January number is all the way down to a 63 vol. So, we really like the vol crush post earnings is real and worth taking advantage of. So how can we take advantage of that? I like looking out a little bit longer here, this 40-day figure, and set up a simple call spread. We're going to take a simple play on CLDR, continuing to perform, continuing to benefit from some market tailwinds, and take advantage of a cheapening vol price here. So let's pull back up that to be able to get in at that vol level. We're looking closer to down around here. So clear all these out. So I need to buy one of the 1250s and sell one of the 15s. Simple $2.50 call spread. We're buying options here. We're net buying options because we're buying this. Even though we're buying one and selling one, the option that we're buying, this 12.5 strike, is going to be much more Greek heavy because it's closer to the money. So we're still going to be long volatility in this play overall. We're getting long call spread and cutting down our costs, reducing our costs by selling that upside call against the long call that we buy here. So it's looking like this is pricing, right around 80 to 88 cents. Actually, pretty robust market. So that's what we were talking about in terms of the earnings volume. That to see, that tightness of price in a tier name like this is great, and it makes for great execution. And should this start to play out early in your favor, you'll probably be able to get out pretty easily too. So to see CLDR close over 15, it's only another $2 in the next 45 days. If we pay 88 cents for this, hopefully we can get that a little less. But if we pay 88 cents, we look to make 250 on this. So, we could almost triple your, I should say double, because, you return $1.60 on 80 cents invested. But so you'll double your investment. But the idea of staying exposed to long volatility here with a directional bent, if you see some of these, higher potential earnings coming from some of their business prospects continuing to project CLDR forward. So interesting name here in the markets. Actually looked like we've drifted off a little bit already, even since we just started talking. So only up $1.20 now, but really interesting volume and volatility as these names start to settle here. As I mentioned, check us out on Twitter for some really good content at harvested_DAFE. Derivatives are for everyone. And here at Harvested Financial, we're structuring trades like this. We're structuring model portfolios, and we're keeping individual investors exposed to the factors in the options markets that will generate alternative returns for them. So thanks for tuning in. Happy Friday to everyone. We hope you enjoy your expiration, and see you again on